Welcome back. You're watching Commodity Champions, and we now shift focus to gold. The yellow metal has seen lackluster in the third quarter of the calendar year, with prices dropping to the lowest level since March 2021. However, a weakening rupee and concerns of a looming recession could make gold a safe haven buying yet again. So is it time for you to jump on the bandwagon as well? If yes, there are many ways to do so. Although physical buying is the most traditional, the rise of gold ETFs and mutual funds make buying the yellow metal as simple as click of a button. So should you be looking at digital gold this festive season? To talk on that, Vikram Dhawan, Head of Commodities at Nippon India Mutual Fund, now joins us on the show. Vikram, hi, happy festivities to you. And while we have seen the trend of buying gold as an investment and not just for physical buying and wearing really seems to be catching up, how would you look at the last one, Samvat, and stack it?
Well, thank you very much for inviting me on your show, Manisha, and wishing you the festivities in a bit of an advance. Gold is, as it is seen by the investors, either as a portfolio hedge or as a outright investment where they want to see absolute returns on standalone basis. Now, if you see the performance of gold as a portfolio diversifier in the past 2 years, whilst the gold returns in INR terms have been flat, but the equity returns have been reasonably good in the past 2 years. And in the past 1 year, it's just the reverse. While equities have given flat to negative returns, we have gold, which has given positive returns. So gold actually has delivered as far as the portfolio diversification or portfolio hedge is concerned. Now, with regards to investors which look towards gold for an outright investment, expecting a standalone absolute returns, I think there's a couple of things they need to appreciate. First of all, every 2 to 4 years, the leadership amongst various asset classes in terms of annual returns changes hands.
Sure.
For instance, in the past 5 years, gold has outperformed equity twice.
Okay.
Obviously, now the question is, which asset class will outperform in the next 1 year?
Okay.
If you have the wherewithal or a model to forecast it, then excellent. Otherwise, the next best thing to do is to figure out which assets and which asset classes are relatively expensive or inexpensive. And especially the inexpensive one, you can focus your attention more on that.
Clear.
And in my personal opinion, I would categorize gold and most of the other precious metals as inexpensive on a relative basis.
Okay.
There are other couple of very important factors which the investors need to keep in mind. First of all, the way that the macroeconomics is unfolding globally, it appears that we may be in a situation where the trajectory of each country and each region in terms of inflation, in terms of GDP growth, in terms of interest rates may vary.
Correct.
Now, if that were to play out in the next 2 to 3 quarters, there is a distinct possibility it may lead to even higher volatility in the currency markets, which we have seen in the past works in favor of gold. Whilst, as we have seen in past 1 year, gold prices haven't gone anywhere in dollar terms. But when you talk about gold prices in yen, euro, INR, and in extreme cases, Turkish lira, they have given sizable return.
Right.
Last but not the least, inflation has also impacted the commodity players and even the gold miners. The all-inclusive sustainable cost of gold has gone up by almost 50% in the past 10 years. And to my mind, as per the data available, and what we have to also appreciate that the cost data from the mining industry comes with a lag, because many large players tend to have long-term contracts for the inputs to tide over the near-term volatility.
Right.
So, taking that into account, my sense is that today at least 5 to 10% of the global mining capacity, their margins are getting squeezed. So, I would say that the all-inclusive, all-sustainable cost for a greenfield project in the Western Hemisphere is not too far away from the current price levels.
Fair
so
point.
These are some of the trends which sort of, make gold a relatively inexpensive asset. Can the prices go lower? Well, we have seen in the past the markets tend to always overshoot on the upside and downside.
It does. Vikram, I also want to know if you're making a portfolio, one, how much of gold would you want to leave there? And two, apart from gold as a commodity within a portfolio, do you think other commodities have a chance of making inroads into a portfolio too?
So I think it first of all, it depends upon, your geographical reality. I mean, instance, in India, we are abundant in some commodities, but we have, strategic commodities like energy and gold and silver and, most of the EV metals, we are actually quite short of them. So, at some point, I think, it may make sense to have products through the mutual funds which sort of address this gap. Because that's where the liquidity lies. The liquidity today is either with the banks or with the mutual funds. And that is where, these opportunities can be tapped. But I think gold, you have to understand why gold is more relevant than the other commodities. I mean, I'll give you just one set of statistics. Before 2007, the size of the balance sheets of central banks versus the GDP used to be between 5 to 20%. This is pre-2007.
Okay.
And now, after two crises, that ratio has gone to anywhere between 30 to 60% and 100% in certain cases. So you can imagine the kind of, the fiat money assets backed by fiat money, the virtual assets or whatever you want to call them, have actually grown significantly. And the world, including the central banks, would need certain, real assets like gold, which are liquid outside the market trading hours. I mean, you can take a gold bar anywhere in the world, and you won't get, too much of a, erosion in the price, the selling, the price of that. That and also gold doesn't have credit risk. So I think as these numbers inflate, as the debt GDP ratio of the world and the corporates and of the common man inflates, I think there will be need for certain real assets which are, we don't have credit risk, which have, most importantly, an ecosystem which is managed by large institutions, which ensures the fidelity and flow of the commodity.
Commodities. Well, absolutely. And gold does stand tall in that. And thank you so much, Vikram, for joining us and putting all of that in perspective on how gold is done vis-a-vis other asset classes in past and what can be expected in the year to come. A very happy Samvat 2079 to you as well. Moving on, and we are now joined by Chirag Mehta. He's Senior Fund Manager at Alternative Investments at Quantum AMC. And Chirag, hi, happy festivities to you too. And what the last few years have done for ETFs when it comes to gold and silver. But first of all, how has the growth been and how does the last Samvat stack up for you?
Thank you, Manisha, and wish you the best of festivities. So if you see gold, last year was a phenomenal year when it came to flows. We saw about 1750 crores of flows in the festive season months, right from September to December. This year also has been good. We have seen already 1450 crores of flows coming into ETFs. So we think that this festival season, I think investors are geared for buying more gold. Because we are seeing volatility in asset markets across the world. Also in India, and gold has stood the test of its time, right? If you see this year, it's the only asset standing tall versus others which are languishing. So overall, that is a testament to the fact that it holds its value when it counts. So overall, we will see a lot of flows coming in terms of buying gold this year as well, given prices are even lower than last year.
Right.
So I think it makes up a good buying from all perspectives.
Okay.
And
Chirag,
we will see a lot of buying.
Chirag,
And the appreciation of assets like gold ETFs has increased significantly over last few years. If you look at 2019 numbers, we just had 4 lakh odd investors in ETFs. Today, we have 45 lakh odd investors in ETFs. So that has grown significantly over last 2-3 years. And if you look at the asset base also in terms of flows and AUM, has increased significantly. So overall, we were at about 5,000-6,000 crores in 2019. It has grown to close to 20,000 crores now. And if you look at the investor base, which has grown 10 times, that tells you it has led to more people adopting this form of buying, because asset growth is just 4-fold versus investor base increasing by 10-fold. That tells you more and more investors have come in and tested this instrument of gold ETFs and have been buying it.
Well, absolutely. Those numbers are very, very impressive, what you spoke about, Chirag. How would you, of course, we've seen new investors come in, but what really is the age group here? I mean, is it like still people who are moving their portfolios, or do you see millennials as well joining the bandwagon?
Yeah, millennials have come into the stock market in a very big way. We have seen a wave of new demat accounts being opened in India, and many of are participating in equity markets. Though most of them still are not attuned to buying gold the way the older generation has been. So I think, but they are learning it given the volatility this year that we have seen. Many would say that having an allocation to gold will make sense. So I think they are learning it the harder way, and I think they are adopting investing in gold ETF. Plus, what's reassuring is the reach that gold ETFs have, because even terminals, stock market terminals in tier 2, tier 3 cities where these participants are also present, gold ETFs can be bought through the same terminals. So they have access to that door, and they can buy shares, they can buy ETFs using the same mechanism. So I think the adoption will be much quicker to the millennial generation. But so far, it's been the savvy investors who have learned and seen cycles over years and are adopting gold as a meaningful allocation within their portfolio.
Right. Chirag, I have one more question for you, and this is on how long do you see people hold their holdings when it comes to ETFs? What is the ticket size that you see most people investing within? And what is the kind of growth that you've seen on an year-on-year basis, incremental growth over the years?
So what we've seen is up till the last bull run that we saw from 2008 to 2011, or markets peaked actually in India in 2012-13. Till that period, we had good amount of adoption and a lot of people buying gold. But when it went to a bear market and we saw some outflows, but most of the investors who kind of took it the right way in terms of allocating to gold rather than just betting on gold, they have stood along with gold. They are holding in gold ETFs. Okay. So overall, much of the investor base is sticky. Much of the flows that we saw post the COVID crisis are still there along. Most of the investors are staying pat. So we are seeing investors stay in for a 5-7 year kind of horizon with their gold allocation, because treating as an allocation, because it's there for the rainy day and not really betting on the gold prices. Betting on the returns that they receive, which are decent enough on a longer term basis in gold, kind of just adding to the flavor that they have. But it's more a risk mitigation tool that they have in their portfolios.
All right. So clearly, it's as sticky as the space that it comes. And I really got stuck on that number, that from 4 lakh investors in gold ETFs in 2019 to nearly 40 lakh investors right now. I mean, that tells you the story on how people are buying gold in India. So gold ETFs clearly is the way to go. Chirag, as always, thank you so much for joining us. Happy festivities to you. And with that, it's a wrap on this edition of Commodity Champions. Thank you so much for watching.